Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at that macro view on the daily and weekly timeframes, and giving you my thoughts of what I think is likely to happen over the next few kind of days and weeks as we kind of progress through 2023. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out, guys. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and it's the first place that we go to notify you of everything that's going on in the crypto space. So why not keep a finger on the pulse of crypto by joining us down in the Discord server? Okay, guys, let's jump right down into this video. We will be taking a look at smart money concepts. That's the one that you see right in front of you here. We'll be taking a look at Elliott wave theory. That's this chart on this side. And then we'll be taking a look at support, resistance, demand, supply zone areas as well. We probably won't be going into the on-chain data. A few things have occurred there, but nothing major. Mainly just a few wallets kind of decreasing, or the number of participants that hold a certain number of Bitcoin slightly on the decrease, but nothing notable at this point in time. In fact, if anything, there's actually slightly more in the way of outflows than inflows at the moment. So again, not much to really talk about from the on-chain data. So what we'll do is we'll start things off with our smart money concepts today, and then talk about Elliott wave theory, supply and demand after that. So on this smart money concepts daily chart, Binance is our data source, by the way, guys. I've just zoomed out a fraction here just so that we can say and take a look at the bigger market structure. At the moment, we do have a bullish market structure potential, and I say potential because it's yet to be confirmed. Okay, so here we have a change of characteristic from our bearish state of play, which was down here, into a bullish state of play from up here. Okay, now this happened when we actually got this closed candle above this key level, which happened on the 17th of March. Okay, until we had closed above this level here, technically speaking, we were still in a bearish structure. Okay, so when we broke above this on the 17th of March, we started to see this change of character from bearish to bullish. Okay, but we yet to confirm it. So now we can see that with prices have started to kind of pull back just over this area here. Okay, and we can see that we've been really heavily testing this trend line on this higher range here as well. Okay, so we hit $31,000 according to Binance and the USDT pair. Now, within this structure to the downside here, some interesting Elliott wave structures can be seen within this little area and within the area that we are right now. Okay, now within those structures, they give us a couple of different scenarios that can unfold. We either have ourselves an ABC structure right in here, or we end up with a more impulsive structure. And we're going to talk about those in a moment. Back to the smart money concept side of things, though, we can see that we have got a weak high and a strong low. This is an indication that we are likely to push up higher than the $31,000 high, according to Smart Money Concepts. I kind of disagree with this until we get confirmation, as we need to see what kind of structures are going to appear within this little area here from an Elliott wave theory point of view, before I'd have confidence to say that we're likely to push up higher than 31K. But for now, it's a weak high, and down at the bottom here, we have the strong low, not likely to get hit anytime soon. And this is mainly driven from the fact that we are above equilibrium, also above the 200 EMA, and we have a bullish change of character. These things combined will give us that weak high and, of course, the strong low. Okay, so knowing these things and knowing that our structure is potentially bullish, what are the things that we would normally expect to see? Well, when we see a change of character like this, it's not unusual for price to want to retrace down to the equilibrium that was a little bit lower than that change of character. And also we can see that if we had these fair value gaps that also fall in line right in this range. So my expectation is that we do end up having to move down here. Now, are we going to change from our bullish structure to a bearish structure if we do that? No. We'd have to drop down quite significantly to completely break out of this structure. I think specifically we're going to have to come down into a new lower low before Smart Money Concepts is actually going to to kind of give us our bearish change of character. It's possible that this one might do it down here around that kind of $19,500. It's possible that that one does, specifically actually $19,549. If we were to come down lower than that, then that might be enough to kind of get ourselves a break of structure here that basically gets a change of character and makes us in a bearish state of play. But for now, this daily chart, according to Smart Money Concepts, is in a bullish structure, but it's not yet confirmed. It will get confirmed if we push up higher than $31,000, though, as we'll get a break of structure that is bullish and it will confirm the bullish narrative. Okay, and that'll be a good thing. It doesn't mean that we can't come down and grab these fair value gaps at some point. It just means that our structure for now would be bullish, and yeah, that's fantastic. We'll see some green in the market. So ultimately, yeah, it's an interesting time. We can see that there's some red internal sell order blocks up here, and this is basically areas where people are likely to sell, and down here are areas where people are likely to buy. Again, nothing really noteworthy at this point on those particular areas. So what do we see? Well, we'll see that we're below, and we're currently getting rejected on the 50 EMA on the daily, and we're yet to test the 200 EMA. Now, if we take a look at the history here just briefly, we can see that we were testing this 200 EMA as a support line. We lost it briefly, we pushed up above it, and we haven't yet retested that 200 EMA. The 50 EMA was also resistance over here, was support here, and is now potentially resistance here. So there's a few things going on there that we need to be a little bit aware of, and that basically may say that we have to visit that 200 EMA. The 200 EMA is currently sat at $24,851. And yeah, that's an area that is of interest to us for a couple of different reasons. But let's go ahead and jump down into the Elliott wave theory side of things. So Elliott wave theory is showing us with the potential for a 5-wave structured move to the downside. This has not happened yet. And we can also see that there is our area of interest that we wicked down into, which was 25,247 to 26,102. So although we have the idea that there's a potential 5-wave structure here, we have already kind of come into our minimum expectations and kind of hit into the range of previous resistance and now support, or previously was supply, potentially now demand. Now, there's a few things going on within these structures that sit outside of our 5-wave structure here that I've marked out. Now, in order for this one to be validated, we need to go down lower than the 1.618. This puts us at $23,937, and this is actually slightly lower than our 200 EMA. So it's a bit of a stretch target at the moment. And also the other thing that we should note here is what's going on within our structure is also quite interesting, because we do have ourselves a 1, 2, kind of 3, 4, 5 structure coming in down here. Now, this is a nested position, and the reason that we could still talk about this 1.618 and still be reasonably confident that that's something that can play out is there's multiple different layers to what is going on here. For example, we've got 1, 2, 3, 4, what I think is going to take us down to our 200 EMA as our 5th. And then inside there, we also have a little kind of wave 1, wave 2, wave 3, 4, and 5 situation, which will then nest us into a wave 1, wave 2, wave 3, wave 4, wave 5 situation like this. Okay, so we can start to see that things are potentially going to be quite damaging. But again, none of that is confirmed yet. It's just looking at the internal structures on the smaller timeframes and giving us the idea that things might actually be a little bit more sinister than we'd like them to be. Now, ultimately, if we measure the distance from this first 5-wave drop and we move it over to here, we can see that we've already come down right into this little range. As I said, 25,247 to 26,102, which is basically our 1 to 1.26 and an A, B, C structure. So it's possible now that we reverse up and that we have that swing to the upside. However, I do not think that is likely considering the internal workings of what is going on the smaller time frame. On this daily chart here on Binance, it looks like this is done and we can, enjoy a bit of a move to the upside. However, I'm not so confident I do not think that's necessarily something that we'll see, but we'll be looking for confirmation of this by breaking the structure that sits within, which essentially will be looking and checking out for the $27,666 level, and also checking to see whether or not we break up above the high here at 30,036. These are the things that are going to confirm reversals or trends to the downside, essentially. So we're key to keep a close eye on those from an Elliott wave theory point of view within these kind of immediate kind of thought processes. Now, as we kind of zoom out of this a little bit further, our Z wave structure from a bigger macro level is still here, and it's still valid for the 12,529 to 19,700. Again, this is a slight new lower low, but not as bearish as what it could be with the area right down here at the 4,964 to 7,074. This one here is a real bearish structure, and that would basically look at everything here as an ABC structure taking us down deeper. It's one that we want to avoid because it would be real bad for retail investors in my opinion, but fantastic for those smart money big funds, institutional players out there, because they have been waiting on the sidelines and have been selling into all this recent pump to the upside. Limited amount of growth within the whales and stuff like that we've seen, and we just see selling pressure, selling pressure, selling pressure. We talk about that quite a bit on the channel. So we really do want a Z-wave structure to play out, but we'll have to see how the larger funds participate, or whether they choose to participate, and whether retail are the ones that are going to be left holding all the Bitcoin bags as it kind of enters into these lows. Because if it does that, and if retail are the ones supporting Bitcoin and preventing Bitcoin from dropping, I think at some point that's going to be a disaster. But we'll see how that kind of unfolds as time progresses. Let's move over into our support and resistance, or supply and demand. We can see this one is on the weekly chart, and Binance is still our data source here. We can see that the weekly stochastic RSI has moved down quite nicely. This is actually a pretty positive thing. It does mean that we are likely to see a pretty nice, healthy correction, and that we are likely to hold a good area of support. Obviously, the stochastic RSI is only an indication as to momentum, and it just means that retail and the holders of Bitcoin are yet to kind of really suppress, or are yet to kind of sell, and they're keeping the price buoyant at the moment. We can find that see here that we found support on the 50 EMA, yet to come down towards that 200 EMA. We still have our area of interest here on the weekly at 24,316 and 25,231. This is an interesting area of previous resistance that could turn into a support level. So retesting this area would be actually pretty good for Bitcoin, because it would confirm that we're in a support range and we can start getting a bit of a move to the upside from there. Okay, a little bit lower than that, if it were to lose that range, we are talking 20,892 to 21,442. Ultimately, the main supply area that you see up here has been rejected in Bitcoin, and this is a previous area of demand. So this was the obvious one that we're looking at, basically saying, okay, if we're going to retrace anywhere, it's going to be between 28,881 and 31,848. If we get a closed weekly position above this, the bulls would really have control, so it'll be interesting to kind of see how that plays out. Now, as we take a look at these support and support ranges and some resistance ranges, or more specifically the supply and demand ranges, we can see that there are three other key areas of interest really that have been scoped out here. We have the one that we've kind of already retraced down to 17,607 and 18,814, and then we have the one that is slightly lower, 11,603 to 13,948. This one here is one of particular interest to me, because this one actually ties in quite nicely with that Z-wave structure, and also is the range that we peaked up into in 2019. So a retracement down here would actually be really beneficial for Bitcoin long term, in my opinion. Would support the idea of a W, X, Y, X, and Z. So let me just show you what that would look like. A W, X, Y, X, and Z would be a really good way to kind of finish this one off. Again, no guarantees are to be made here. Again, if we were to really think about those lows and a bigger ABC structure, A, B, C structure, then we have to look at 6,590 to 7,981 as another key range of previous supply and resistance, or supply and demand, being an area that we haven't really tested since late 2019. Obviously, we saw 2020 drop us down lower than this range ever so briefly before really going and rallying up. So again, we don't want to think about that one just yet, but it is an area of interest because these are key areas within our weekly time frame. Now, if I take this just one extra layer to the monthly, there is a big concern occurring here. We've started to really progress up on our monthly stochastic RSI. Okay, so let me see if I can make this a little bit bigger right here. We can see that in 2021 that we grew from the low area here. We were not oversold, but we pushed up quite heavily up into that overbought range. Now, during this particular time period for Bitcoin, okay, so take that March low 2020 up to where we were overbought, which is approximately here. It was 1,442%. Now, if we do the same thing from our oversold position down here and we start to rally up, we can see that we're doing very insignificant gains, yet that momentum on this monthly time frame is heavily correcting to the overbought range. This is not a good sign. This is showing us that there is insufficient strength in the momentum to pushing the price of Bitcoin to the upside. In a nutshell, that means there's less participants really getting involved in buying Bitcoin. This isn't anything unusual to me. This is something I've been talking about for months upon months upon months within the on-chain data. We see large investors who have thousands of Bitcoin basically looking to sell and to offload to retail investors during this move to the upside. And as a result of this, it means that there's a lack of buying pressure driving the price of Bitcoin to the upside. And so it's no surprise that the stochastic RSI is also showing this with a fast approaching overbought level. So we should be concerned about that monthly time frame. We can still push up a little bit further, sure, but at some point it looks like we're probably going to have to come down pretty hard if we want to see that next bullish market. Again, we make no guarantees. We do not need to go to overbought and we do not need to go to oversold. But at the moment, this is an indication that people are just not simply that interested in driving Bitcoin's price higher. This is also seen with very insufficient volumes on the inflows and outflows in comparison to previous years. In 2015, we saw 4.6 million, actually it's 4.7 million now, Bitcoin moving on and off the exchanges, okay, for the same time period as 2023, 1st of January through to the 17th of May. We saw 4.6 million in 2015. In 2019, it was 6.7 million. And here in 2023, for the same time period, we're at 3.7 million. We are the lowest now than we have been in the previous two cycles. And it's nothing to do with the value of Bitcoin. It's all to do with the volume of Bitcoin that is not being moved around or transacted upon. And this is a big concern because it means that we're not seeing that strength in that movement that we need to see for a bullish movement. Okay, so ultimately, a bearish market is defined when the supply outpaces that of the demand, and a bullish market is when the demand outpaces that of the supply. Right now, we are not seeing the demand, and we're not really seeing a huge amount of supply entering the system either, but it's a little bit more than there is on the demand side. So I'm leaning more towards the bearish side, and I think our monthly is also giving hints of this as well. I'm going to leave the video right there though, guys. If you did find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. Until the next one, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.